Hello traders, Gary Wagner for Trending Market. It is the 5th of November, Thursday. It is approximately 11:30 here in Honolulu, 4:30 in New York. Markets have closed. Dow Jones Industrial Average, along with the U.S. equities complex, closing in essence unchanged on the day, 17,863, putting it off about 4.15 points, under 0.2%. In terms of the range itself, you've got 929 on the high and 779 on the low. How that corresponds to the Standard & Poor's. Standard & Poor's off almost a full point, 2094. Of course, we are looking at the E-mini. And we currently do have a long position in the E-mini. We're long at 2068. Our stop is currently at 2080. And what I want to take a look at today is the potential for this market to come under a little bit of pressure. And that, of course, is based upon the fact that we've got the jobs report coming out tomorrow. And that, of course, can certainly add some volatility to the market. Now, if we look at the range on the day today on the E-mini, we did have a low of 2084. So just close to, we didn't hit our stop by any means, but also when we look at this 50 cycle moving average, and that's based upon a 240-minute candlestick chart, you can see that that also matched up with the low right in here. So my sense is that you can go ahead if you want and just pull profits prior to the report coming out, because where the stop sits itself, we could easily see the market whip around and have that classic knee-jerk reaction to whatever the numbers end up being and still end up moving into positive territory. If you want to maintain your position, you're certainly going to want to maintain your stop. I can't see any area to tighten it to, especially since the range today went into 2084. Now, in terms of some of the other markets that we are looking at, crude oil sliding again off about 2% on the day, 99 cents per barrel lower. Now it is trading in that range-bound area, sitting at around 45. Of course, stellar performance over the last couple of days has absolutely been the dollar. Now, the dollar is certainly off of the highs, but it is above 98, and it has closed above the prior top that we saw in yesterday's activity. And the other thing that you want to look at when we look at the dollar is the fact that on a technical basis, let's go ahead and pull up our drawing tool, but on a technical basis, we have these tops that come in roughly at 98.40, markets roughly at 98. So we could easily see resistance in this area because we do have these series of tops that come in at this particular price point. So traders, there's absolutely no doubt we could see a little bit of weakness come into the market tomorrow. The one caveat to that is when we look at our linear regression, which is basically a bullish channel line, we are really now at the bottom of this channel, and you can see that this is tracked pretty well from top to bottom. You don't get anything here, but it goes to the top, bottom, top. And so the fact that we are now at the bottom of this channel lets me believe that we should see some real support come in this area. However, that's a technical indicator, and based upon what happens fundamentally as the report is released will determine the next price points that we will obviously see in the Standard & Poor's E-mini. This has been Gary Wagner, wishing you as always good trading. We'll talk to you after the jobs report tomorrow for the weekly wrap-up. Bye-bye.